Whoever suggested, thank you very much. Okay, let me repeat that all the nominal accounts are closed by transferring their balances to the trading and profit and loss account. It's very much necessary to find out to calculate correct profit or loss. Depreciation does not involve any cash outflow like salary, commission, rent, etc. etc. Even then, depreciation need be recorded in your books of account. So after passing the entry for depreciation, this entry will be passed at the end of the year on 31st March. Both the entries will be passed on 31st March. Next entry. Next transaction that may involve this sales account, this machinery, this asset is that of sales. After it becomes obsolete, after 3 or 4 years, we may sell this asset to someone. In that case, we have to pass entry for the sale of that asset. The entry will be very simple. Like in the case of purchase, asset was debited and cash and bank credited. In this case, the entry will just be reversed. Cash or bank, or if sold on credit, then the name of the person who has purchased asset from us will be debited. And asset account will be credited. And cash and asset both are real account. Cash is coming into the business, asset is going out of the business. So this will be the entry for sale. The next entry will be the entry for providing depreciation up to the date of sale. Suppose in the 4th or 5th year, you have already used that machine for 6 months or 7 months. Then you have to pass the entry for depreciation for 6 or 7 months. Depreciation will be calculated for 6 or 7 months and the same entry will be passed as is visible on the left hand side, number 3. The entry made for depreciation at the end of the year consists depreciation of the full year. But in the year of sale, you have to calculate depreciation for the period for which it has been used. It may be 2 months, 1 month, or suppose at the very beginning of the particular year, the asset has been sold, then you need not provide depreciation. So the entry will be same, depreciation to asset account. Then the third entry is for profit or loss. And you have to calculate the profit or loss on this transaction. There can be two situations. Either there is a loss or there is a profit. If there is a loss, profit and loss account will be debited and asset credited. In the case of profit, the entry will be reversed. Next, these two entries are actually passed when we are crediting the asset account itself for depreciation. But there is another method of accounting for depreciation. Here at this stage, I am not talking about the method of calculation of the amount of depreciation. I am talking about the method of accounting, method of passing entries for depreciation. The method of calculation of depreciation are different. Those methods are straight line method and written down value method. Those method will be discussed later on. At the moment, we are looking at the method of accounting. So one method of accounting says that whenever depreciation occurs, it should be debited and asset account should be credited, and then thereafter this depreciation will be transferred to profit and loss account. There is yet another method in which depreciation is not credited to the asset account. A separate account known as provision for depreciation is kept in our books. This account is also known as accumulated depreciation account. These two kind of methods of accounting of depreciation actually create problem in final account of different entities. And the students usually get confused and make wrong adjustment in final account. So this is an important chapter. And if the depreciation is being credited to a separate account and not to the asset account, the entry will be depreciation account debit to provision for depreciation account and not asset account. Asset account won't be credited. Asset and depreciation will be recorded in different accounts. But in balance sheet, no doubt, you will show depreciation by way of deduction from that asset. But the recording is done in two different accounts. Thereafter, this depreciation will be transferred to profit and loss account. There is no change in this entry. Only one entry gets changed if the method of accounting is different. Instead of crediting the asset account, provision for depreciation account is credited. I am repeating this fact the third time. Just remember it. So these are the few entries that are involved in our depreciation accounting, in our chapter relating to depreciation. So now we will practically see how these entries are and ledger account prepared by taking a question. Let's go through the question. Kindly mute your mic. Someone's mic is open. Look at the question. Let me read out the question for you. A firm whose accounting year is a financial year purchased on 1st July 2018 machinery costing rupees 30,000. This is the first transaction. It further purchased machinery on 1st January. Then again, the second machinery was purchased after 6 months on 1st January on 2019 for rupees 20,000. Yet another machine was purchased on 1st October. There are three transactions relating to purchase of machinery. And the third bullet point says that on 1st April 2020, one third of the machinery installed on 1st July 2018, the original machine, not the full machinery, only a part of it 1/3 of the machinery installed on 1st July 2018 became obsolete, and it was sold for rupees 3,000. And we are required to prepare machinery account in our books, in the books of the company. The method has been mentioned in the next sentence, that depreciation will be provided on fixed installment method. It is actually straight line method. Straight line method and fixed installment method. There is another name for this method also. This method is also known as original cost method. So there are three alternative names available for this method: original cost method, fixed installment method, and then straight line method. And the depreciation will be provided at the rate of 10% per annum. The question says, it asks us, what will be the value of machinery account on 1st April 2021? So here 3 years are involved in this question: 18 to 19, 19 to 20, and then 20 to 21. And there is 99% possibility that if any question is asked in your exam relating to depreciation, then it will require us to prepare the ledger account. Journal entries are usually not asked in this chapter. The question says, what will be the value? So, to know the value of the machinery after 3 years, we have to prepare the ledger account. So here we go. This is the format of the ledger account. Machinery account. The first transaction, we have to think about the journal entry, but we will not pass the journal entry. We will directly post it into this account. So for the first purchase, machinery account will be debited. So on the debit side, we will write to bank account, and amount is 30,000. Then after purchasing this asset, has any other asset been purchased in this year? The accounting year of the company is a financial year. Financial year means it will end on 31st March 2019. So before that, on 1st January 2019, in the first year itself, another machinery was purchased. So again, we will debit this account for this second purchase of the machinery. So to bank account once again, rupees 20,000. The third machinery has been purchased on 1st October 2019. The financial year has changed. This transaction has occurred in the year 2018, 19, 20 actually. Our first year is 18-19, and the next year, second one, is 19-20. So first of all, on 31st March, at the end of the first year, that is 18-19, we will have to pass entry for depreciation. The first machinery has been used for 9 months, from 1st July to 31st March. It comes to 9 months. And the second machinery has been used for 3 months. So depreciation will be calculated and machinery account will be credited. So here we go by depreciation. And the amount will be 2750. Depreciation at the rate of 10% on the first machine for 9 months and on the second one for 3 months. So this is the entry, and now the account will be balanced in the first year. So the balance CD is 47,250. In the second year, balance will be brought down at the beginning of the second year, 47,250. Then once again, in this year, second machinery was purchased. So again, we will have to debit this account. So here is the entry to bank and rupees 10,000. Accepting this entry, accepting this purchase, there is no other purchase or sale in the second year. The transaction relating to sales occurred in 2021. Look at the date in the third line. 1/3 of the machinery was sold on 1st April 20. So once again, we will have to calculate depreciation. So can anyone tell me what will be the amount in the second year of depreciation? Suggest a figure. The method is straight line or original cost method. What should be the amount of depreciation that will be credited to this account in the second year? Come on, speak up. The amount will be
5,600.
5,000. Please repeat again, sir. You were right.
5,600.
5,600. 5,600. 5,000 is the correct depreciation on the first two machines. Because the original cost of first two machines were 30,000, 20,000, that is 50,000. 10% on 50,000, 5,000. It's correct. But how did you arrive at rupees 600? The calculation of month. For how many months this third machine has been used? Come on.
6 months, sir.
So depreciation will be 500 only. 10% of 10,000 will be 1,000. 1,000 for 1 year, and for 6 months the depreciation will be 500. So it will be 5,500. Here is the amount by depreciation. 5,500. So we will balance this account again. In the second year, balance CD will be 51,750. And the third year, final one, balance brought down to the third year. And now in this year, 1/3 of the original machinery has been sold. And you just always remember that when an asset is sold, you need to pass three entries, three different entries. One is for the receipt of amount on sale, for receiving the cash. That is first entry. Second one will be for providing depreciation for the period up to the date of sale. This is the second entry. And third one will relate to profit or loss on such sale. So the entry will be on the sale of one third of the original machine. The first entry will be by bank rupees 3,000. The amount has been, sale price has been mentioned in the question. Then there will be entry for depreciation. And this depreciation will be credited in the third year if the machine has been used for some period in the third year. But in the instant question, the sale has taken place, the sale has occurred on the first beginning of the year itself. The asset has not been used in the third year at all. So the depreciation in this case will be 0. Now we have to calculate profit or loss. The only difficult thing in questions relating to depreciation is the calculation of profit or loss. You must be careful while calculating the amount of profit or loss. And comparatively, it is easy. It is easy if the method involved is straight line one. But if the method mentioned in the question is written down value, then it becomes quite more difficult to calculate the profit or loss. In our question, the method used is straight line method. So first of all, we will calculate profit or loss. So here we have the working. While calculating profit loss, we should remember two formulas, two equations. And these are profit loss equal to selling price, sales price of the machine, minus written down value on the date of sale. And the second equation, second formula, WDV equal to written down value equal to original case cost minus total depreciation up to the date of sale. Actually, these two formulas are not used in the order mentioned. First of all, we have to calculate the WDV. Thereafter, the first formula will be used. So for calculating WDV, we have to calculate the total depreciation from the very beginning to the date of sale. And that too on the machinery which has been sold. So here the calculation goes 10,000 was the original cost of the machine. Actually, the original cost was 30,000 of the first machine. But the question says one third of the machinery has been sold. So for the purpose of calculating profit loss, the relevant cost will be one third of 30,000, that is 10,000. And this machine, this piece of machinery was used for 9 months in the first year and then for full year in the second year. And in the third year, it was not used even for a day. On the first date itself, on 1st April, it was sold. So the total depreciation from the beginning to the date of sale is 1750. So after deducting this amount, we get the value of the machine as 8250. And this machinery has been sold for rupees 3000. So the second formula will be used: profit or loss equal to 3000 selling price minus 8250, which means there is a loss of rupees 5250. And if there is a loss, it will be credited to the asset account by writing by profit and loss account on the credit side in the particular column. 5250. Finally, at the end of this third year, we will have to calculate depreciation once again on the remaining machinery. The machinery which is remaining unsold at the end of the third year. So suggest me the amount of depreciation. What amount will be credited as depreciation in the third year at the end of the third year? Come on, it's simple. Suggest me a figure. You can do it. Calculate depreciation on all the machines one by one. Out of the first machinery, first purchase, 2/3 portion of the machinery is remaining unsold. 2/3 means 20,000. So on this 20,000, the depreciation for full year will be 2,000 at the rate of 10% per annum. And on the second machinery also, the depreciation will be 2,000. And on the third machinery purchased in the second year, the depreciation will be 1,000, 10%. 2/3 of the first machine and the second machine and the third machine have been used for full year for all the months in the third year. Or you can simply add the cost of all these three machines, 20, 20 and 10, 50,000. And the depreciation will amount to 5,000 at the rate of 10%. So the depreciation in the third year will be 5,000. And now the balance sheet. So the question has been solved. The question asked us to calculate the value on 1st April 2021. So the value on this date is 38,500. So this was the first method of accounting. Let me repeat. This was the first method of accounting in which we were required to prepare a machinery account only. Now we will solve this question again by a different method in which depreciation will not be credited to the machinery account. It will be kept in a separate account which will be known as accumulated depreciation or provision for depreciation or also reserve for depreciation. Sometimes depreciation reserve is also given in this accounting method. So this was the first solution. Now the same question. But in this case, we will prepare two ledger account, one for machinery and another one for depreciation, provision for depreciation. So first of all, in the machinery account, this was the first purchase, 30,000. Then again, the second purchase to bank account, 20,000. And at the end of the year, we will simply write balance CD. We will not credit this account by the depreciation. So this is the machinery account for first year. Again, for second year, the balance will be brought down. And the third machinery has been purchased. It will be 10,000. And then again, there is balance CD of 60,000. The third year, two balance PD will be 60,000. But now, in the third year on the first date, 1/3 of the first machinery has been sold. So now we will have to prepare provision for depreciation account to calculate the amount of depreciation on the machinery sold. Or you can simultaneously prepare both these accounts for first year, then for second year, and then for third year. For the purpose of simplification, I have prepared the machinery account, first of all. And when some machinery has been sold and we are required to know to calculate the depreciation on the machinery sold, we shifted to the depreciation account. This is not the actual procedure. Actually, you prepare both the account, machinery account and the provision for depreciation account in the first year itself. So what was the entry for depreciation under this method when a separate account is being maintained for depreciation? The entry was depreciation account debit to provision for depreciation. So here on the credit side, in the provision for depreciation account, we will write by depreciation and the amount will be same, 2750 as calculated in the previous method. So look at these two accounts. In the previous method, this depreciation was credited in the machinery account itself. But in this method, the depreciation has been kept in a separate account, provision for depreciation account. And this account, provision for depreciation account will also be balanced in the first year to balance CD, 2750. In the next year, second year, balance will be brought down on the credit side, 2750. And again, we will provide depreciation in the second year. The amount was as calculated in the previous solution, 5,500. The balance CD will become more. It will get accumulated. Both the years depreciation will get accumulated. So there is another name for this account also. Since all the depreciation of different years are getting accumulated in this account is also known as accumulated depreciation account. So the balance CD will be 8250. In the third year, balance BD will be 8250. And now a piece of machinery, one third actually has been sold. So when you sell the machinery, then you have to bring the depreciation of that machinery, of the machinery being sold, to the machinery account. You were not crediting the machinery account for depreciation at the year end. But when a particular machinery gets eventually sold, then it becomes necessary to bring the depreciation from that another account, from a separate account, to the machinery account. So the depreciation on this part of machinery, one third machinery, was 1750. First of all, by bank for 3000, this machinery was sold. Then the depreciation will be transferred from this provision for depreciation account, which is 1750. The total depreciation, accumulated depreciation on the machinery sold, 1750. This will be debited in the provision for depreciation. And if you debit the depreciation of the machinery sold, then this balance of provision for depreciation will reduce. The relevant depreciation has been shifted to the machinery account, 1750. And now the profit loss. Profit loss was calculated in the earlier accounting method. It was 5250. And once again, on the unsold machinery, depreciation will be provided in the third year on the unsold machinery, which was 5000. So by depreciation 5000, and balance CD will be 11500. So this is the position. Actually, the value shown by these two accounts, when added together or subtracted, will be same as in the previous method. In the balance sheet, we will show machinery on the asset side as rupees 5250, and below that we will deduct depreciation in the inner column, rupees 5000. But first of all, let's find out the balance of machinery. Balance CD in the machinery account at the end of third year is 50,000, and from 50,000, the balance CD 11,500 will be deducted. So the final value, which will be shown in the balance sheet on the asset side, will be 38,500. And this 38,500 is the same figure as shown by the machinery account in the previous method. But the difference is that the cost of the machinery and depreciation are being separately recorded in two different accounts. Depreciation is not being credited to the asset account. And this method is considered as better one than the previous one. The accounting standard relating to property, plant and equipment, AS10, issued by Institute of Chartered Accountants, suggest that this accounting method should be followed. This method is more understandable because when many types of machineries in a big company, when many type of machineries are purchased, then crediting the depreciation in the machinery account itself becomes cumbersome, difficult, and everything gets mixed up. You won't be able to identify the different machines purchased separately on different dates. So depreciation account is kept separately in a different account. And the asset account will just show us the different types of asset purchased on different dates. The cost of all the assets will be clearly available because no depreciation have been deducted in the machinery account, in that asset account. So this was the second method. Let's total the provision for depreciation account also. So this was the second method. Once again, there is another method in which the asset disposal account is prepared. Actually, the third method is a variant of this second method. We prepare two accounts, one for asset and one for provision for depreciation. But when the asset is sold, then everything relating to that sale transaction is debited or credited in a different account. So there will be three different accounts. One for machinery, one for the asset, one for the provision for depreciation. And in the year of sale, one more account will be prepared. Asset disposal account. This account is not prepared in every year. Only in the year in which some asset is sold, this special account will be prepared. So let's look at the solution of this question by the third method. We are solving the same question by all the three methods so that we can compare what different entries are being made under all these methods. And our concept will be clear. So here again, all the entries will be exactly the same like in the second method. Machinery account, provision for up to the date of sale, we will prepare these two accounts in the same way as in the second method. So our first purchase was 30,000, second one 20,000, by balance sheet 50, and then in the second year, third machinery was purchased for 10,000, balance sheet was 60,000. In the third year, to balance BD was 60,000. And on this date, the asset was sold. So let's prepare provision for depreciation up to this date. Same entries as in the second method. And now, after passing all the entries up to the date of sale, we will prepare another account, machinery disposal account, in which the cost of the machinery which is being sold will be transferred from the machinery account to that special account. So in the third year on the credit side, look at the machinery account. On 1st April 20, the machinery costing 10,000 is going out of the business. It's being sold. So while purchasing the machinery, we were debiting this account, and since now the machinery is being sold, it will be credited. So on the credit side, we will write by machinery disposal, by asset disposal, and rupees 10,000 will be taken out of this account to a newly opened account, which is machinery disposal. Similarly, the depreciation relating to this machinery, which is getting sold, the total depreciation up to the date of sale will also be transferred from the provision for depreciation account to the special account known as machinery disposal. Actually, this method is the simplest one. And what do we do in this method? We simply transfer the cost of the machinery from the machinery account to the disposal account, and the related depreciation from the provision for depreciation account to the special account, and calculation of profit loss etc is done in that separate special account. So first of all, the cost of the machinery was transferred rupees 10,000 to machinery disposal. Then depreciation up to the date of sale on this piece of machinery, which was 1750, as we had calculated in the previous methods, will be transferred to this account. This is special account, machinery disposal account. This account will be debited by the cost of that machinery, rupees 10,000, and credited by the accumulated depreciation. And for the receipt of sale price, we will credit this amount to the machinery disposal account. Rupees 3,000 were received on its sale. So this 3,000 has been credited to machinery disposal account. And now the benefit of this method is that after making these three entries, you need not calculate profit or loss. You need not make a separate calculation for profit or loss arising on the sale of asset. Just find out the balance of this account. And that balance of this account will be either a profit or a loss. If the debit side is greater, then there is a loss. If the credit side is greater of this account, then there is a profit. So have a look at this account. If we compare both the sides, debit and credit side, then it's clear that debit side is more by rupees 5250. So this will be the loss arising on the sale of asset. Balancing figure 5250. So these were the three methods. And any of these three methods can be asked in your examination. So remember the journal entries and how the ledger sound accounts are being prepared. Now the method of calculation of amount of depreciation. In this question, the amount of depreciation was calculated by a straight line method. And what if the question had asked us to follow written down value method? Then all the entries, all the journal entries and the preparation of these accounts will be done exactly in the same way. However, the amount of depreciation, the balances of account will become different, but the entries will be same. And I think you already know the method of written down value method. It is also known as diminishing balance method or reducing installment method. In this method, depreciations are calculated on the written down value. Suppose you purchased a machine for rupees 10,000 in the first year. So in the first year, depreciation will be 1,000. If the rate of depreciation is 10%, this 1,000 will be deducted from rupees 10,000. And in the next year, the value becomes 9,000. And applying the same rate of percentage, that is 10%, this 10% will not be applied to the original cost. The depreciation in the second year will be rupees 900. In the diminishing balance method, in the written down value method, the depreciation is calculated year after year after deducting the depreciation from the cost of all the earlier years. So if the original asset was costing rupees 10,000, then in the first year depreciation will be 1,000. 1,000 deducted from 10,000, it becomes 9,000. In the second year, the depreciation will be 900. After deducting 900 from 9,000, the amount will come out to be 8,100. And in the third year, depreciation will be calculated on 8,100 at the rate of 10%, which will be 810. This is the method. Only the amount will become different, but the accounting will be exactly same as demonstrated in these three methods. So that's all for today's class. This was the method. Three types of method and the question solved by all the three methods. I would like you to solve this question by following written down value method. And in the class, day after tomorrow, I will show you another solution of the same question by following WDV method. And apart from this question, I will share some other questions also for your practice. And the questions will be the same questions asked in your earlier examination relating to depreciation. I will send at least 5 questions for your practice. Try to solve them. And I will solve the same homework in our next class. So for today, that's all, gentlemen. Thank you. I will share the video of this class for your future reference, and also send the questions to you, if possible tonight or tomorrow morning. You will have 2 days to try them out. Okay then. Thank you, sir. Am I audible?
Thank you, sir. Yes, sir.
The audio was clear?
Yes, sir.
Okay. Okay, thank you then. Good night. Good night to all.
Thank you, sir. Good night, sir. Good night.